Welcome back, traders, to another episode where we're going to be talking all about news events. So, as I'm sure you all know, news events are pieces of information that are released to the public about a number of different topics. When we talk about news events relating to trading, however, they tend to be number-based announcements where they'll release data such as how the economy of different countries is performing. So, when we get these news announcements, they tend to be of different impact from low to high. As you can see here on the screen, what we've got, is the impact column where you can see that we have different icons of different colors, We've got yellow, orange, and red. So this is indicating to us the impact of different news events. Yellow being of low impact, where the data released is not likely to have much impact on the Forex market, for example. As we go to orange, obviously it has more chance of causing impact, and red, is high impact news, which means it has a very high chance of causing some kind of larger volatility in the markets, which may impact the chart. Now, of course, you can get both scheduled news announcements and then also unpredicted announcements. For example, like war-related, or if someone in power happens to say something of value, this can cause sudden impacts on the charts as well. So say, for example, the President of America, happens to tweet something or say something. This suddenly could cause a major impact onto the charts. And again, if there was a major update in a war, for example, then again, this would cause uncertainty and it would cause volatility to enter the markets, and you would see some kind of news spike just relating on what has been said. So of course, if you look on the screen now, this is an example of how planned news events are laid out on a website called Forex Factory. So here you can see we have, first of all, the date of when the news is going to be coming out. We've then got time. So these are all planned news announcements, so you can actually find out ahead of time that certain news is going to be coming out at a certain time, so you can actually prepare for it when trading live. So here you can see all the different times, and then we have the currencies. So the currency, is which currency the news is related to. And this is going to be important because what you'll be able to do is work out, which of my currency pairs are going to be affected. So say, for example, there's a news announcement and it comes out and it's related to the dollar. If I'm now trading pound dollar and I know that there's dollar news coming out, this means that I need to be very, very cautious when trading this pair, because I know that whatever happens based on the dollar, this will affect the pound-dollar relationship, and price is likely to spike either up or down or both, depending on what the news actually is. So it's very, very important to understand what currencies are actually being represented here, because you're going to be able to get a better understanding of what's actually going to get affected in the live charts. Of course, even if it says dollar, it may still impact, pairs that aren't related to the dollar in some instances. It's all kind of relative to what the news actually is, but mainly just focus on the currency that's being displayed here. So then you can see that we have the impact, so the impact, like we spoke about a minute ago, tells us the likelihood of it actually affecting the charts, If it's a yellow, then you probably won't even see much movement on the charts, It might actually just create a little bit of volatility, but that's about it. If you go up to the reds, then you need to be very careful, because once we reach this category, then anything can really happen on the charts, It's very unpredictable. We don't really know. It could go up, it could go down, or both, A lot of the time you find that it leaves big spiking candles in both directions. So you've got to be very, very careful if you're going to be getting involved during high impact news. So then it actually tells you what the news event is, So this can be anything from a PMI to a PPI to non-farm payroll. There's multiple different events and news announcements that come out on a daily basis, related to all different pairs, As you can see on here, we've got all different currencies being represented, from euro to the Swiss to the pound to the dollar, So there'll be all different news announcements related to all different currencies, And all these news announcements are, okay, they tend to be economic based, okay, and they're just going to be releasing different information based on how countries and currencies are performing, okay, generally around the world. Now, the main news events to watch out for, okay, are things such as non-farm payroll, okay, so non-farm employment change. That's quite a big one, okay, very, very important. You also have things such as FOMC, which is another very important event, okay, which is normally, I believe, at 7 o'clock on Wednesdays, and that's GMT time, okay, and I think these occur once every month. And then you get things such as core PPI, retail sales, CPI. So there's all different types of news events, okay, that will be coming out, okay, at all different kinds of times. And those ones are normally the major events that you need to be aware of, okay, because these are going to cause the most volatility in the markets. So after that, okay, after we understand what the news event actually is, we've got details. So on Forex Factory website, you can then open this, and what it will say is it will talk a little bit about what the news actually means, okay, and then it will pretty much say what the forecast means, okay, and whether a positive number, okay, is going to be either good or bad for the currency. So here, okay, you can see that we've got three numbers. So we have the previous value, we've got the forecasted value, and then we've got the actual value. Now, the previous number, okay, is going to be the number which was last released related to the news event. So, okay, in this example, if we look at the bottom row, you can see that we have ISM services PMI, okay, so the previous value was 49.6. We then have the forecasted number, okay, so this is predicting, okay, or forecasting what the next number is actually going to be, okay, so ahead of time, it's saying that they believe that it's the number that's going to come out is 50.5, okay, so then if you look at the details, what it will say is 50.5, is that going to be good, is that bad, and what the actual number is going to represent. If it's higher, then what does this mean? If it's a lower number, what does this mean? Okay, so it just explains in a little bit more detail what it actually represents. And then of course, at the time of the news event, okay, the actual number will be released, and then it will give you a number, and in this example, okay, it says 55.2, which is in green, which means it was better for the currency. Okay, so that means that it was a good news for the dollar, and this will then impact pairs such as pound dollar, and it will cause things like pound dollar potentially to drop because the pound will become weaker and the dollar will become stronger, okay, and that will then cause impact on that particular currency pair. So this is how we actually go about reading, okay, a potential news event, because they're all on here, okay, and it tells you everything that you need to know from the time to the currency that's actually affected, what the news is, the impact it has, and then of course the actual data that has been released. Now, obviously you can trade fundamentals, but for us, we don't really want to be trading the news because obviously we actually trade more of a technical basis. So we don't really want to have to rely on news events to predict market direction. Okay, there's a saying which says news creates volatility and not the direction, okay, because a lot of the time these news events are priced in way ahead of time, okay, and what I mean by that is that they kind of already have an understanding of what the news is going to be. So what you'll see is that the movements in the market will actually kind of predict what the news announcements are actually going to be saying ahead of time, which means it's already priced in. So this is why sometimes you don't necessarily always see a movement, and sometimes you'll see a movement in the opposite direction to what you thought because of these pre-planned moves. So this is why it's very important, okay, to make sure that you're not always using the news as an indication of direction, okay? Solely use the news as an indication of volatility and the fact that even a pre-planned trade idea that we, decide, say for example, we've got an impulse and a correction, we've got a nice corrective candlestick structure, okay? And then we've entered a position in a given direction. Let's say that trade then starts to play out and then a news event comes out. That trade may still play out, okay, in the given direction because the news is only going to create the volatility, which means that it may just speed up that move that was already planned. So that's how you want to be going about trading the news, okay, but generally I don't tend to trade the high impact news events at all, okay. Non-farm payroll tends to be a non-trading day for me, okay. It's normally the first Friday of every month. And I don't tend to trade that day because normally when you get these high impact news days, what you'll see is quite corrective, consolidating price action, okay, before the event, and then during the news event what you'll see are massive candles, okay, explosions of volatility, and normally big wicks in both directions, which tends to take everybody out of the market. So now we have a little understanding of how to read a news event, okay. What we're going to do is we're going to have a look on the charts now at some previous news events, okay, and look at the types of candles and the types of volatility that actually gets presented into the markets, okay, during these major high impact news events. What we're going to be able to do is create an understanding as to why we either want to be in or out of the markets, okay, and the ways in which these news events can of course create volatility and not always the direction. So let's get straight on into that now. Okay, so the first news event we're going to look at is this one here. So as you can see, we're on Tuesday the 14th of February 2023, and on Forex Factory at the time, okay, it had this news event just in here. Okay, so at 1:30 it says there's a dollar currency pair being affected, okay, and there's CPI, CPI, core CPI, okay. Now here, okay, it says what the previous was, okay, so minus 0.1%, 6.5% and 0.3%. The predicted, okay, was 0.5%, 6.2 and 0.4, okay, and then the actual event was this. So obviously because this is pound dollar, okay, we know that this pair is going to get affected. So as you can see here from the predictions, okay, here minus 0.1%, predicted 0.5%, and the actual was 0.5%. So you can see here that it actually predicted it very accurately. In this example, okay, you can see that it was 6.5. They thought it was going to be 6.2, but instead it only dropped 0.1% to 6.4%. Whereas the bottom one, 0.3 was the previous, they predicted 0.4, and the actual was 0.4. So, you know, some of the time the forecasted number is what the actual actually becomes. Okay, sometimes it's a little bit different. It really does depend on the occasion. So if we were looking at this, okay, and we actually say we knew the outcome ahead of time, what would we presume was going to happen to the currency? Well, if you look here, okay, we have a green value, which means that this news event, okay, actually came out as positive for the dollar. So say we knew this ahead of time, okay, let's just say we knew that that news was going to come out and it was going to be positive for the dollar. Well, in a pound dollar currency pair, okay, if something's bad for pound, it will go down, okay, and if something's good for dollar, okay, it will also go down, okay, whereas if it's good for pound, it will go up. Okay, and if it's bad for dollar, it can go up, okay, because obviously the pound is the first currency, okay, so that's what's going to call, okay, the moves either up or down. If it's bad for the pound and it's pound dollar, that's going to cause the market to drop. So because we know this, okay, we know that it's actually come out as a positive for the dollar. That means this should drop, because why? If it's good for the dollar, it's bad for the pound, so the value of the pound against the dollar, okay, will drop. So let's just say, okay, that's what we thought was going to happen. Now let's have a look at what actually happens, okay, and we can have a look at the relationship between what a major news event can actually do and why, okay, it's not always the best idea to trust and trade fundamentals. So, okay, if we keep playing price out, what actually happens? So we get, okay, a couple of candles play out. This is the 15-minute time frame, okay, and we get to the candle before the news. So right now, okay, you can see that there's not much momentum in the market, okay, we've had quite a consolidating price action in here, and then we've started to kind of impulse to the upside. All the candles kind of look similar, okay, nothing too crazy is actually happening. And now let's have a look at what happens at the high impact news event. And there we go. Okay, so just have a look at, first of all, at the difference in size of this candle compared to all the other candles. Okay, so as you can see, when this candle came out, there was a massive move, okay, and a massive increase in volatility. So if we have a little look at it again, what can we see, okay? Boom. It pushes to the downside, okay? We also saw that it pushed right up, and then it came back down and closed very, very flat. So like I said, what it does is it tends to sweep above, sweep below, close in the middle, okay? And this is a real true news candle. So this is why, okay, we didn't necessarily want to trade the news, and especially trade the news in a bearish idea, because it wasn't necessarily going to trade bearish. Okay, you can see that it did go bearish, but it also went bullish. Okay, you had no chance here at selling this and profiting, okay, unless your stop was like miles out of the way to the upside. Okay, there's no way you'd be able to survive this. So this is a clear example of why you want to avoid trading high impact news events, because it doesn't benefit us in any way at all, okay? It's completely out of the ordinary. It's a complete anomaly to the chart when you look at all these, you know, smooth moving price candles, okay? And then suddenly we get this massive high impact news spike. So let's have a look at another example now, okay, of a slightly different news variation, and just to kind of keep showing the examples of these major news events and the ways in which they're presented on the charts. Okay, so let's have a little look at this example here. So what we've got is a 1:30 p.m. news event. We've got dollar as the currency being affected. It's high impact news, okay, and it's looking at average hourly earnings, non-farm employment change, and unemployment rates, okay. Obviously you've got the detail folder if you want to have a look at what this is actually about, okay. And then we've got here the previous, the forecast, and the actual. So if we had a look at this information in here, okay, we can see that it was originally 0.4%, 260,000 and 3.5%. Now the forecast, okay, 0.3%, 193,000 and 3.6%. And the actual, okay, the top one, they got it exactly, 0.3%. Now the second one, okay, was very, very, very out. You can see here that it went from 260,000. They predicted it was going to go down to 193,000. But actually it went up by almost double to 517,000, okay? So it was a massive increase and it wasn't predicted. Okay, so because of this, okay, this means that it might have actually caused quite a big impact on the charts. Now again in here, what have we got? 3.5, 3.6, okay, and it was actually a little bit lower than they thought at 3.4%. So again, it was another green value, okay, because it decreased, which was good for this currency pair. So the major one I'm looking at, okay, is this middle one because of how different the forecast was to the actual. So obviously ahead of time, if you didn't know what the actual was and all we knew was the forecast was 193,000, okay, that's going to give you a certain idea in your mind of what might actually happen, okay. This is showing the unpredictability of trading the news because suddenly the actual came out and it was so far different from the forecast. And this is very, very dangerous if you were in a particular trade, in a particular direction, okay, because if you were wrong, you could also face slippage. Now, slippage, okay, is what happens when you have a stop loss on your position. So say, for example, you have a 10 pip stop, okay, and that is a 1% risk over a 10 pip stop. Now, slippage is when price moves so fast, okay, against you that your actual broker can't actually close your position because there's no one to take the other side of your trade. So what happens is price will drop and it will drop below your actual stop loss, okay, and it means it will actually close you at an even worse price when it can finally find someone to take the other side of your position. This means you can get slipped on your trade and you could actually lose, you know, up to twice as much or even more than that, okay, dependent on how fast the move actually happens, okay. So we want to try and avoid slippage as much as possible, and the way you're going to get slipped is if you trade these high impact news events, especially with a small stop, okay. That's the easiest way to get slipped. So if we looked at this, okay, what can we think is going to happen? So it's positive for the dollar, which we already worked out means that if it's negative for the pound, it's probably going to go down, okay, because it's positive for the dollar. So we could predict that because this is such a greater number than the forecast, okay, that price may actually drop, okay, because the pounds are going to become weaker and the dollar is going to become stronger because of this positive dollar news, okay. So let's actually have a look now and see what happens at 1:30. So
The best time to take action is now. What are you waiting for? Tired of struggling with market direction? Want buy and sell indications at a click of a button? Who wouldn't? Check out TradeDork's buy and sell indicator today at TradeDork.com.
That's the 12:45 candle, the 1 o'clock candle, the 1:15 candle, and also look at the size of the candles, okay? So again, all the candles, okay, very, very similar. Price is just moving very smoothly down, very smoothly up, okay? Nice body to wick ratios on the candles, and now we've got the impact news. And there we go, okay? So what can we actually see from this impact news? So as we can see, look at the size of this candle. So you can see that this candle, okay, it caused a massive move to the downside. Okay, it's complete anomaly on the screen. It's completely different to everything else in here. Okay, and we had no idea that this was going to happen. Okay, they said it was only going to be 193,000. That was the forecast. So for it actually to come out, okay, and it be a greater number and it be better for the dollar currency, it's caused this massive spike to the downside, okay, and price has actually held at the bottom here. So if we actually just measure this candle, what you can see, okay, is this is 121 pip 15-minute candle, okay, and if you compare that to all the other candles on a normal day, okay, we're looking at the average candle being something like, okay, like 15 pips. So we're comparing a 15 pip candle to a 120, okay, pip candle. It's completely different. And this is the power of these high impact news events, okay, because it will cause such volatility in the markets that it's very, very unpredictable. Now, of course, you know, like I said, price tends to create volatility and not direction. So what do I actually mean by this? I mean that, for example, what you might be able to do, okay, in some situations is already be in a trade, okay, where you've predicted, say, for example, that, you know, this could be liquidity, or, you know, you're looking at the breakouts of these areas, okay, you might be looking for this as an old break and retest zone, okay, that's been kind of tapped into a few times. Okay, there's lots of different things that you could have been actually trading at this time, okay? So say, for example, you will manage to get in a trade, that is the only way you're going to benefit on certain news events. However, it is still very, very risky. Why is it risky? Because of slippage. And of course, say, for example, okay, you do get in a sell position in an area such as this. Okay, what if price went the other way? Okay, if price went the other way, you could easily get slipped out multiple times of your loss, okay? You could end up losing, you know, multiple losses, okay, 2, 3, 4% on your trade, all because you got involved in a position, okay, in a very risky area. So this is the importance of being aware of news events, okay. Now we've learned how to actually read news events, okay, where to find news. You can use a website called Forex Factory, great place to be able to work out what news events are coming up. And of course, we understand how to be safe during news events, which news events to avoid, okay? Of course, the major news events such as non-farm payroll, FOMC, and things like CPI and PPI, okay? And now we can take this information and add it into our trade plans, because when we have a trade plan, we need to talk about, okay, how we're going to deal with news events. Are we going to trade them? Are we going to sit on the sides and just watch what happens? What are you going to do, okay? Like I said, for me personally, I don't even trade the whole day of non-farm payroll, okay? I take this just as a day off because I understand the impact that it can have on the markets. So of course, you know, we've gone through some examples here of how news can impact the charts. If you want to look at some more examples, then go have a little look on Forex Factory, okay, see what type of news events are coming out, and have a little look at the types of candles that react, you know, at the time of these news announcements, okay? Look at the wicks, look at how many times it actually goes in the direction of the forecasted price, okay, and also have a little look at how many times, okay, the news comes out as positive for the currency, but it actually goes against that currency on the chart, because this is showing a pre-priced in move. So hopefully you guys have a better understanding now of how to trade news, okay, and when to be in the markets and when not to be in the markets, okay, and I will see you all in the next video. So happy trading, and I will see you guys there.
Be a dork.